Good morning, good afternoon, good evening, folks. How you doing today? We are back with the legendary investor, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. How are you doing? Good to
I'm,
be back, huh?
yes, absolutely. So the audience may not realize that we actually took about 6 days off because you were gracious enough 2 weeks ago to record 4 videos with me. So we did two that day, and then I snuck two in last week. So they saw us together, even though we haven't spoken in 2 weeks. So thank you for that.
Yeah. Do it all for them, not you. So
Yeah, yeah, exactly. Amen. It's all about the audience. So hey, we're here July 19th. The stock market's been open for about, I don't know, 30 minutes, or no, I guess it's been an hour and a half now, 90 minutes. And last time I checked, it was down nearly 800 points. So I thought it'd be a good conversation for you and I to have to just pontificate. Hey, stock market's crashing. It's down 10, 20, 30%. What changes in our investment horizon?
yeah,
Because
so you
people are
are
wondering.
West Coast.
Correct.
So I'm East Coast. So the market, has been open for, a couple hours now for
Okay.
me on the East Coast. But yeah, we're down 781 points right now. And the interesting thing is the markets are so high now
Yeah.
that the point moves look significant, but from a
Yeah.
percentage standpoint, they're really not. I mean, it's down 2.25%. And, I really feel like we can reasonably expect and anticipate a 10%, 15% correction. I mean, we
Totally agree.
should be due.
Totally
So
agree.
being down, a couple of percent is not a huge deal in the whole scheme of things, but it looks really ugly when you're looking at the points,
Yeah.
versus percentages.
Yeah. But this video is, I just want to pontificate because again, what this May, I mean, according to Morgan Stanley this morning came out with a note saying, hey, we're due for a correction, 10, 15, maybe 20%. What I want to do here is just say, okay, pick a date in the near future. The stocks are now down 20%. What changes in our world, right? We look at our market. We're making investment decisions all the time. I don't know if you're swayed by what's going on in the stock market. I'll sort of share my opinion too, but I'll start with yours. All right. So, the stocks are down 20%, someday in the next week to 10 days, 20 days. What changes in your world?
For me, it's a hunt for value. I'm always on the hunt for value. I'm an opportunistic investor, so I'm not a long-term market investor in any market at any time. I'm a compound cash, ROI over time in terms of the least amount of time, effort, and energy possible. So my business philosophy is and always has been, how do you make the most amount of money in the least amount of time with the least amount of energy and effort possible? So I look for
I don't like that.
yeah, I look for value in highly efficient markets because all markets are just highly efficient right now, and they have become more efficient over the last 10 years. So when you see the stock market where it's at, number one, it's efficient. Number two, it's artificial. It's being propped up by the Fed and
No
liquidity that's been put
question.
out there. Real estate's the same way. Low interest rates has propped the market up, combined with the pandemic, where we've seen a lack of inventory, can't get houses built fast enough because there's no help. Supply chain shortages, things like that. So for me, corrections can bring two things I'm looking for. One, opportunities to enter somewhere in some area sector, depending on which market is correcting. Generally, if the stock markets are going to correct, that can continue to boost real estate because what's the Fed going to do? They're going to shoot money out there and keep interest rates low, right? So I keep an eye out for that just to see what the policy coming out of the Fed's going to be, see how far they're going to let it run. Now a correction, 10, 15% is no big deal. A crash,
Right.
20, 30, 40% is another situation, another issue.
Yeah. Yeah.
So
10,
right
10,
now I'm in opportunity value hunt. If we get a crash, 30, 40, 50%, I'm in protection mode.
Okay. So let's play that out. So again, what I'm hearing you say, and if I'm wrong, just correct me. So let's assume the markets are 20%. So right on the border between,
crash and correction.
Right. A correction and a crash. Yeah. So would it be fair to say that you might opportunistically look for a particular stock or maybe an index or sector that's beaten up unfairly and go in for a short-term play? I don't know.
Yeah.
Okay.
Yeah, so I'm a swing guy, and I did the same thing in the bottom at 2009 when the stock market was, everybody thought it was going to zero.
Yeah.
Dow was 6,000, S&P 600. That's when I jumped in.
Nice. See, that is one huge difference between us is the market, the stock market goes down 20%. I don't even bother looking, right? I did get into like 7 or 8 stocks, one of them being Citigroup when it was under $3 or under $2 or something. Like if it really crashes, I'll come in. but I won't bother because I've been burned in the stock market historically. Again, I got a scar that I keep pointing at. So maybe it's a biasy that I just need to throw away. But yeah, the stock market goes down 20%, not spending an iota looking at a stock or a sector. So that won't change. But yeah, if it crashes 40%, yeah, I'll put money to work, no question. So I think that's
Yeah, I'm a swing momentum investor, so I look for big swings and I
Yep.
trade with the momentum. So if it's
Okay.
down or up, that's what I'm looking at. And it's got to be big. I don't buy the dips, I don't buy the
Yeah.
corrections. I look for big moves.
Okay.
So I've been out of the market for, the last however many years now. I've missed a lot of opportunity, but
Sure.
to me, it just never made any sense, and it's marginal gain. But
Yeah.
I mean, if I'd have stayed in over the last 5 to 7 years, I might have gained 10, 15%, maybe 20.
Yeah.
So I haven't missed a ton, but I haven't been in the markets because they just don't make any sense to me.
Oh, I think the stock markets are greatly exaggerated. I think Morgan Stanley's right. I think you're right. I think we could easily see a 10 to 20% drop in the next 90 days. No question. The other thing that stuck out to me is did you see the 10-year note this morning? It's under
Yeah.
1.2.
Mm-hmm.
That's a signal. To me, that's a signal that the rest of the world is scared. That's
Mm-hmm.
what it tells me. What about you?
Yeah. It's very interesting where we're at. And that started last week while you were gone.
Yeah.
Everybody's going, what's going on with the bond market?
Yeah.
Stocks are tailing off. Bonds should be going up. Gold should be
Right.
going up.
Yeah.
You're not seeing that. I think you're going to see a flight to cash, especially if
Exactly.
this accelerates.
Yeah, no, you're absolutely right. And we've talked about it. I think we've done 2 or 3 episodes, folks. If you don't know this, Greg Dickerson has a playlist on this channel, all his own. It's got hugely valuable stuff to go back and listen to. And again, he was one of the first people talking about, cash is not trash. He's raising cash so he can find opportunities, just like Jamie Dimon at JP Morgan. So that's awesome. So back to kind of what I do in my market if there's a correction, right? 20% or less. What I look, obviously I'm in the residential space, not really commercial or other stuff. What I look for is, 10 to 20% could start to impact people in bubble markets. I live in the Bay Area. It's a very expensive market, right? Our average median price is $1.2 million, which is stupid. We do have a lot of stock wealth. A lot of companies went public. A lot of people are paid with what's called RSUs. And if the stock market, especially tech, right? If tech fell 20%, that could stop or delay house buying decisions, right? It could be that impactful. However, I invest in Fresno, California, which is not a market that is influenced by stock market gains. It could have some impact at the margins with people moving and things of that nature. But generally speaking, a 20% or less crash in the stock market doesn't really impact Fresno. I've been investing in Fresno since before or just after the dot-com crash. So, I've kind of seen that. So I do look for the impact on the consumer, and where I will see a 20% correction be most impactful is in the bubble markets, not so much the tertiary markets. Does that make sense?
Yeah. And, it's really interesting. So in the past, the way the stock market generally will affect real estate is most people will cash out of the stock market and buy real estate.
Yeah, exactly.
So
Yeah.
that's how it affects it on the positive. I've never seen it affected on the negative because, they're two different things. So valuations of stocks, bonds, commodities, things like that are not generally related to or affected by real estate. Those are two separate asset classes, two separate differentiations. And, of course, there's real estate stocks, but
Mhm. Yeah, REITs and all that.
what you could see, is people will cash out, go into real estate because it's just a different asset class.
Mhm. Yeah.
And you'll see the vice versa. If somebody loses money in the stock market, well, they'll sell their real estate and go into the stocks, but that's not broad scale. What's really interesting about this point in time is Silicon Valley. Let's say every company in Silicon Valley stock gets slammed, cut in half, doesn't change the underlying business.
No.
Their stock is just overvalued because there's free money. People are looking for somewhere to put it. So you can cut, Amazon stock right in half. You can cut it down 75%. Amazon is still a very profitable, successful company that's not going anywhere. Same thing with Apple, same thing with Google, same thing with Facebook. Those are the people that are hiring and paying exorbitant salaries to people, because the average salary is probably, for executives there, 3, 4, 500,000 and up. Average employees are making, pretty good money. So that's why the housing stock is being driven up in those areas. Stock values or stock prices of those companies aren't going to affect real estate, only if there's something wrong with the companies. And, again, we're not seeing issues with earnings. We're not seeing issues with, the business models of the tech companies. We're seeing issues with valuations because it's just, there's just so much liquidity out there. It's got nowhere else to go. It's the risk trade.
Yeah, no, I totally agree with you. And again, I saw it up close and close. That's the beauty of it, doing this for 20 years and focusing on one market. Is I've seen what happens when, the stock market rolls over or tech gets hammered. You're right. A lot of people start to go, maybe I should do that real estate investing thing. I can get leverage. I can get 30-year debt, blah, blah, blah. So yeah, it's funny how when people have fear in the stock market, they run to a different asset class, and being a landlord or a real estate investor is often that other asset, like you said.
And, and on the cash thing, so a lot of people misinterpret or misunderstand when I talk about cash. I did a video the other day with Chris Vermeulen, of the technical traders. He's out of Canada. And we were talking about right now in this climate with the markets, where they are, where do you want, let's say you have $100 million and you want to allocate, what's your percentages?
Okay.
And, for me and for him, a large percentage is cash. So people misunderstood that, saying that I think you should be in cash, or I think you should invest in cash over the long haul. And what I'm saying is that when it's very uncertain times, and when, everybody is calling for a correction, the markets are going to correct, you want to be mostly in cash so you can take advantage of major swings. And, I'm not saying cash is a value play. I'm not saying it's a long-term store of wealth. I'm not saying that's where you should be. What I'm saying is, when the world is uncertain, when economic Armageddon is coming, everybody goes to the dollar all around the world. And it's the number one most held currency around the world. So it's not my opinion. It's not what I think. It's the facts.
Yeah.
You look at the charts.
Agreed.
When everything's down, dollar's up. When everything's up, dollar's down.
Yeah.
So it's not my opinion. It's not anything other than, it's just a fact. And it is what it is. And it's the way it's going to be, long term. Like a lot of people think or propose that, a cryptocurrency or Bitcoin can replace the dollar. It just isn't going to happen.
No.
It's always going to be the United States dollar, because it's backed by the United States government. We're the largest economy in the world. China might surpass us in GDP. They will never surpass us as a world reserve currency, because look at what China's doing.
Yeah, it's no chance. Yeah. And I totally agree with you. We're seeing a great example right now, folks, of the fear, the dollar strengthening when people are scared. That's what's happening right now. That's why the 10 years under 1.2, and if it's down from 1.5 and a peak of 1.77 or whatever it was, it's because the rest of the world is scared. It's just,
if everything goes to zero, all assets go to zero, the dollar will be the medium of exchange of value around the world.
No
question. The way it's going to be.
No question. So again, folks, what you're hearing here, at least in my opinion, is if there is a stock market correction, 20% left or less, not really much moves the needle. If there's a crash, 40% or more, that will get our attention. We will allocate dollars to stocks or categories or indexes, whatever.
Well, I go into protection mode first.
Oh, that's true.
So the first thing I look at is, how do I protect myself? I go to cash. Where's the safest place to keep cash? So that's what you got to look at. What banks are at risk, what financial institutions are at risk. So you need to make sure you understand where your cash is, depending on how much you have to protect. Or you put it in an instrument that is going to be protected during that. So that's first and foremost. How do you protect it? Because if you're going down that much, you don't know where it's going to stop.
Yeah.
And then once you get down, you can kind of start to pick the bottom, like, I did back in 08, 09. It was pretty easy to kind of see a bottom there. Although I didn't know enough about the markets to not know if it could go to zero. I mean, I was like, what's going on?
What's going on? Yeah.
Yeah. I mean, I'd never really invested in markets before that. And I jumped in right at the bottom because, I was young and I can take risks. Now I'm a little different. Now I'm a little older and I'm protecting what I've built. So I'm going to be in protection mode first. I'm going to make sure I understand, are we done? Then I'm in.
There you go. Well, I appreciate this, folks. Pay attention to episode number 2, because I think Greg and I are about to disagree on something that is important. So Greg, do me a favor. How can people follow you?
GregDickerson.com. Everything is there. YouTube channel, podcast. I put out content every day. So check it out.
Yes, you do. It's great stuff. Thanks, buddy.